Hello, in today's video we will be discussing different types of taxes, their rates, and some example calculations. We will cover topics like corporate tax, dividend withholding tax, VAT, and withholding tax. Let's start with taxes based on profits. Firstly, corporate tax. It is calculated on a company's profit. In Turkey, the corporate tax rate is 25%. Let's look at a simple example to see how this tax is calculated. For example, the revenue is $1 million. The expenses $700,000. Profit $300,000. And the tax, as you can see, $75,000. And the remaining profit is $225,000. So in this example, $75,000 in corporate tax is paid on a pre-tax profit of $300,000, leaving $225,000 as post-tax profit that can be distributed. So secondly, dividend withholding tax. After corporate tax, if the remaining profit is distributed to shareholders, a 10% dividend withholding tax is applied. If no dividend is distributed, no withholding tax is paid. Dividend withholding tax is calculated on the profit after corporate tax. Continuing with the previous example. The remaining profit was $225,000 and the dividend withholding tax is $22,500. So, as you can see, we will multiply this amount with 10% and net amount paid to shareholders will be $202,500. So, in this case, after distributing dividends, the net amount shareholders will receive is $202,500. So, when our declaration periods, companies need to declare their profits and losses by the following dates. So for the first quarter, the January-March, by May 17. And the second quarter, April-June, by August 17. For the third quarter, July-September, by November 17. And the fourth quarter, the October-December, by April 25 for the following year. So, if a company is at a loss, no corporate tax is paid, of course. Now, let's look at taxes based on transactions. So, value-added tax. The general VAT rate in Turkey is 20%. For essentials like food, clothing, and other basic goods, VAT rates of 1% and 10% are applied. Here is an example to explain how companies calculate VAT. The general rule is that if the VAT on sales invoices is greater than the VAT on purchase invoices, the difference is paid to the tax office. For example, sales amount can be $100,000. So VAT is $20,000. So purchase amount $70,000. VAT will be $14,000. Tax to be paid will be $6,000. So $2,000 minus $14,000. So if the VAT on purchase invoices is greater than the VAT on sales invoices, the difference is carried forward to the next month. For example, sales amount can be $70,000 and the VAT $14,000. And the purchase amount $100,000 and VAT $20,000. Carried forward VAT is $6,000. So VAT returns are filed by the 28th of each month. And if there is tax to be paid, it must be done within the same period. So fourthly, withholding tax. Withholding tax is collected at the source on certain types of income and is declared monthly. The declaration must be submitted to the tax office by the 26th of each month. Companies declare various types of deductions through the withholding tax return, including these. 1. Income and stamp tax deductions from employee payrolls. 2. Income tax withheld on payments to independent professionals like accountants, lawyers, consultants, etc. And 3. A 20% income tax deduction calculated on gross office rent. These taxes are recorded as expenses or costs in company records and are taken into account when calculating taxable income for corporate tax purposes. So that's the end of our video today, prepared to provide a summary of tax information for businesses looking to invest in Turkey. In summary, we have discussed key tax types in Turkey, including corporate, dividend withholding, VAT, and withholding tax, and how they are calculated. So we hope that it helped clarify the topic for you. If you have any more questions, feel free to ask in the comments. If you enjoyed this video, please don't forget to like, subscribe, and turn on the notifications. See you in the next videos. Goodbye.